98% still blows away any hedge fund, buy and hold of the S&P, buy and hold of the Bitcoin. It blows away all of those things. In today's video, we're going to be looking at the NASDAQ. Now, if you are in the market, which you probably are, where you're starting to notice little ramblings and little rumblings around town of people saying, oh, the market's dropping. Well, yeah, the market drop has been kind of in play for a while. And really, if you were subscribed to Happy Trader, like and subscribe, show a little bit of algo love, whatever. Hate to plug it that early in the video, but this was something we talked about, and this was kind of announced that the big dogs were selling and all that stuff. So that's going to be something to be aware of when you see whales like Jeff Bezos and Elon Musk dropping tons of stock. Oh, and by the way, there's a guy named Warren Buffett that dropped a ton of stock in a really good company called Apple. That should be a little bit of a precursor of kind of how things are looking from a macro perspective. But we are going to look at the NASDAQ. We're going to be running a back test using our indicator, happytrader.io, sentiment AI with Trend, and we are going to see how we did. And now you see it, now you don't, and now you see it again. And all you have to do with Happy Trader is set your buy and sell alerts. And we're going to show you what those alerts would have resulted in as far as year to date on the NASDAQ. So big tech. And we're not looking at the ES. We're not looking at the micros. We're looking at the regular size NASDAQ. So the first thing we want to do is head over to our NQ page. And if you're not comfortable with the NASDAQ, you can get into the micro NASDAQ. So you can get into 1/10 the margin. But we are going to be using the full size NASDAQ for this back test so we can see how it's doing against someone that's holding QQQ or something very similar to, this is a derivative of the NASDAQ. So we're going to go ahead and bring up our strategy tester and we're going to set our parameters. Looks like we have our dates set already. Let's go ahead and just do a reset of the settings. We're going to go into property. We have our deep back tester on, and we're going to set our initial capital to that exact margin requirement. And in fact, what we can do is probably pad that a little bit, right? We'll put another $2,000 in there. So that's going to take a little bit off of our percent gains, but hey, whatever, right? If we get a little bit of a drawdown there, you're going to have to put money in the account anyway. So whatever, right? So we're going to have one contract. Now with pyramiding, you can't leave this blank anymore. Got to put it to 0 with the new TradingView update. So we're going to hit OK there. And then we're just going to double check, make sure everything is good to go. And we are going to make sure our dates are perfect, which they are. And we have the 45-minute chart. So before we run the back test, we're just going to be doing the downtrend and the uptrend. So we're going to be taking a buy AI. You can see it overimposed there, and then close the AI on the downtrend. That's all we're doing, right? So we're going to go ahead back to the strategy tester, generate the report, and we have a 71.95% year to date, and that is pretty darn skippy. Now, take a look at a couple of these things. Now, again, if you do subscribe to the channel, if you're not new to the channel, you can see percent profitable, 40%. Now, generally, I mean, that's still a little overheated. I think the market could come down a little bit more, frankly. Now, I'm not saying the market is definitely going to come down, but I said this in the last video. The market could come down a little bit more. And the reason why is because when you're using Happy Trader, we almost have this kind of built-in indicator of, hey, if our win rate is like 40%, if it's anywhere over the 30% range, we might be getting a little overcooked. So that might tell you that if you're somebody who's trading, you don't have to necessarily trade or signal to signal. You can take profits on some of these big run-ups, right? So when you see a big run-up or even a short, take your profit, right? And again, this is not financial advice, but sometimes you got to take a scalp here and there. And if it looks like things are getting overheated, like, look at this move right here. It's so big you can't even get it on the screen. We had our signal here, and it just went up and up and up. These might be some scenarios where you might want to take some profit. Now, some great things about this, right? So we have some bad things. Let's point out the bad things. It's in red. Makes it easier for us. We have a 52% drawdown. Unfortunately, there's no free lunch on Wall Street, but we do have hedging techniques. If you subscribe to the channel, you will be made privy to those techniques through our other videos of how to hedge. but it generally involves a core position that is hedged by your hedge, right? So, and then you can unwind that hedge. It's going to create a little bit of drag, similar to how when we went in here and we put 25K, even though we didn't have to do that because we didn't take a drawdown. So this is really more like probably 75, 70, almost 80%. If you do get that core position and it drops all the way back down, you don't want it to just keep going. Like same thing with this drop here. You don't want this thing to keep going if it touches all the way back here. You want this thing to be hedged, right? And then you can unwind that hedge later at the expense of a little bit of drag. But this is not hedged, right? So this strategy has produced 71.95%, one single contract. We're not even scaling up. And most strategies will scale up and scale out, scale in, scale out, right? So we have 40 closed trades, 40% profitable. It was at about, I think, like 44 to 47 in one of the last videos. It was either the last video or the video prior. And I was saying the market looked a little overheated because normally happy trader conventions are like 33%. It's like one out of three trades that we win. And again, win rate is not directly correlated to expectancy. You can see the proof in the pudding there, but you can really see it here when you go to the list of trades. And you can see our winners are much bigger than our losers. So we have more frequent losers, but then our winners are much larger on average. So we'll just go through the trade log a little bit so you can see a streak, streak, streak. And you're going, oh, wow, this happy trader, this is terrible. Oh, wow, look at that losing streak. And then you start going on winners, right? You get the winner here, you get a winner here. Boom, another one here, 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 right? You get the point, but let's go to the overview. You can see the average of all of these trades is $451 or 0.13%. And that's going to be on average across all of these 40 trades that you made so far this year using our alerts. You are going to have an average win across all of those trades of four, giving you the positive expectancy, thus giving you this percentage, 71.95% of this starting capital. Now, again, if we lower this back, let's see what happens when we lower it back. We get, look, 78%, right? So a little bit different, almost 80%. And you can see it's just nice right now. Nobody's telling you that you have to trade signal to signal. If you start dipping down like crazy, the rolling hills like to be the rolling hills, right? And they will keep going, just like they'll keep going up. But overall, the market goes up over time. Now let's drill back down. Say you're a lower time frame trader. Let's go to the 15-minute chart and see how we did there. So we'll go ahead to the 15-minute chart, and you can see we took a little bit of a drawdown that you might have wanted to have hedged. But look at how well we're doing this year, 167%. You can see the percent profitable in the 15-minute chart a lot better, a lot more within the normal happy trader conventions, and 114 trades. That's not bad for the 15-minute chart. So great job there. We have a 47% drawdown from, it looks like it's either from here to here or it's this initial drawdown there, one of the two. And then we're taking a drawdown here as the market starts to kind of correct and consolidate. But the average trade expectancy on the 15-minute chart, $340. So not bad at all. Now, if we drill all the way down to the 5-minute chart, we're going to go ahead and do that. You can see just, risk reward, right? So you have a lot more trades. So if your commission's like $1.50, you're going to have to multiply, 398 times $1.50 to get your commission amount, but then deduct it from this net profit. And you're still going to be sitting pretty at 223.27% year to date, again, with no scaling in, scaling out. And yes, you would have had to have hedged, so there would have been a little bit of drag. And then, of course, if you go back in here and you set this up to, 25K, it's going to look a little bit different. And then, of course, if you hedge it, it's going to look a little bit different, right? So you're going to have more chop the lower you go. And that's really how we're doing with the NASDAQ. So we've had a lot of users saying like, hey, how are you doing, in this market drop, right? And I mean, look at this thing. This is serious, right? And even just today, this market drop. But if we go out to let's even go out further, let's go out to like the 2-hour chart. You can just see this massive, massive consolidation happening here, right? So, markets go up and markets go down, and the markets giveth and taketh away. One other thing I do want to look at is Bitcoin. Let's see how we're doing with Bitcoin year to date. So let's go into Bitcoin. We're using the same indicator. We're just going to turn it off, turn it back on. You can set your alerts going into add alert once per bar, once per minute. You want to set these 4 alerts right here. Just kind of set it and forget it, and it'll just pop up on your phone. You don't have to sit in front of your computer. But we are going to use the 45-minute, and this should be a lot more volatile and potentially more interesting. Plus, we're going to have a bigger margin. So, what we're going to do here is just set up BTC, and we're going to be looking for BTC. And we found it right here. And look at that margin, $85,000. And this is why I prefer to trade the NASDAQ. These margins are insane. This is a new emerging market. So naturally, the brokers are going to have margins. That's going to affect at the end of the day what our percent gain is on capital, our capital return. So now we have to bump that all the way up to 85. And that's just really tough to have to do. But we're going to do no pyramiding. And transparency is the most important thing, and we're going to go from August 7th. We're going to do the same exact thing. Just double check, make sure everything's okay. We have Bitcoin up. We have our strategy is superimposed, our long only. You can see it right here when we kind of flicker over. So let's go back to strategy tester. We're going to go ahead and run our report. And you can see for the 45-minute chart, Bitcoin not too bad this year. Now, we did get off to a little bit of a rough start. You can see that we would have had to have hedged a little bit here. Now, whether that's using puts, whether that's using inverse futures contracts, whether it's using Ethereum, whether it's using correlated assets, whatever, you can see that with Bitcoin and with crypto, it is much more volatile. There's no getting around that. Now, something I do want to point out, we had that same kind of like 40-ish trades, 72% gain, but a lot lower of a drawdown. So we've been pretty bullish on Bitcoin. Now, as far as percent profitable, 34.09%, that looks pretty in line with happy trader conventions. So yeah, this thing could go down, or it could just, kind of do one of these where it went down and it just kind of, drifts for a little bit and then it goes up, right? So might be doing something like this pattern going into the election cycle. That's kind of what I'm hinting at. But overall, looking great. Let's go ahead and just drill this down. It should get a lot uglier the lower we go. Let's see. Yeah, 98% still blows away any hedge fund, buy and hold of the S&P, buy and hold of the Bitcoin. It blows away all of those things because we're using leverage. But, getting into these hedges, you need to be a little bit more advanced. When are you going to take your hedge off? Are you going to wait till you go up X amount of percent? Are you going to put the hedge on at X amount of percent? Or are you just going to just kind of let this thing ride and let the account be the stop? That's completely up to you. But you can see here on the 15-minute, only 137 closed trades. Max drawdown only 23% and percent profitable 31%. You can see the list of trades. And again, more losers than winners. But man, look at the size of some of these winners right here. I mean, these are just crazy, right? A $23,000 and then a $7,000 and $11,000. I mean, come on now, right? So our average trade expectancy, even better than that first NASDAQ test, 615.69 US dollars, 0.25% per trade over all of these 137 trades. And the last thing we want to do is go down to the 5-minute chart. We're going to be looking year to date. And let's see what we have. And it just gets uglier the worse that it goes. If you have hedging in place, or if you just have a really big account and you're properly positioned size, which is super important, so you don't get mentally shaken out of a trade. Again, this is not financial advice. I'm not telling you how to trade, but this is where you're going to get that 93% beta, that alpha, that beta, whatever you want to call it, that high flying type performance. But you're going to also have this going against this profit, right? So you're going to have 93% profit, but you're going to have 401 times whatever the commission is, maybe 150, maybe 160, depending on your broker, right? Now, percent profitable on the 5-minute chart, Bitcoin doesn't look super overheated, but it does look like it could kind of go down a little bit, but it could also go up. We don't know. Markets are super random, but that's going to be today's video. We are doing good. We are looking fantastic across the NASDAQ, across Bitcoin. We're going to be doing some more videos on Ethereum, some altcoins, and also the S&P 500 year-to-date performance. Be sure to like and subscribe. My name's Ryan, CEO and head quant here at Happy Trader. Have a great day and happy trading.